Every morning, before you wake up, before the market opens, before CNBC turns on its cameras, an artificial intelligence system processes 14 million data points. It reads classified shipping manifests. It monitors satellite imagery of factory parking lots. It tracks the cell phone movement patterns of Federal Reserve Board members. It scans every earnings call transcript in 47 languages. And then it makes a decision: buy or sell, risk on or risk off, and $10 trillion moves. This is Aladdin. It is BlackRock's AI-powered portfolio management system, and it controls more wealth than the GDP of every country on Earth except the United States and China. It manages $10 trillion in assets directly for BlackRock, but through licensing agreements, it influences over $21 trillion across pension funds, sovereign wealth funds, insurance companies, and central banks. You have never heard of Aladdin? That is by design. BlackRock does not want you to know that a single algorithm sitting in a data center in Wenatchee, Washington, determines the price of almost every asset you own. Your retirement account, your pension, your home value, your employment prospects. All of it flows through Aladdin, and here is what should terrify you. Aladdin does not care about you. It does not care about fairness. It does not care about the American dream. It cares about risk-adjusted returns for BlackRock's clients. And when Aladdin decides to move, you are the one left holding the bag. Let me show you exactly how this system works, what it knows that you do not, and how it is being used to transfer wealth from the uninformed to the elite. To understand why Aladdin matters, you need to understand what BlackRock actually is, because it is not just an investment company. It is the most powerful financial institution in the history of civilization. And most people have never heard of it. BlackRock manages $10 trillion in assets. To put that in perspective, the entire U.S. stock market is worth approximately $50 trillion. BlackRock controls 20% of it. They are the largest shareholder in almost every major corporation in America: Apple, Microsoft, Amazon, Google, J.P. Morgan, ExxonMobil, Johnson & Johnson. Every company you have heard of, BlackRock owns a piece. But BlackRock's true power is not in asset management. It is in Aladdin. Aladdin stands for Asset, Liability, Debt, and Derivative Investment Network. It was created in 1988 by Larry Fink, BlackRock's CEO, on a single computer. Today, it runs on over 25,000 servers processing 250 million calculations per week. Aladdin is not just software, it is the operating system of global finance. Over 200 financial institutions use Aladdin to manage their portfolios: pension funds that hold your retirement savings, insurance companies that hold your premiums, sovereign wealth funds that control national reserves, central banks that manage monetary policy. The Federal Reserve used Aladdin during the 2020 crisis to manage its emergency bond buying program. Think about that. The Central Bank of the United States outsourced its crisis response to a private company's algorithm. BlackRock was simultaneously advising the Fed on which bonds to buy while trading the same bonds for its own clients. This is not a conspiracy theory. This is documented. It was reported by the Financial Times, the Wall Street Journal, and Bloomberg. The conflict of interest was acknowledged, and nothing was done about it. Aladdin sees everything. It processes data that you and I will never have access to, and it acts on that data milliseconds before any human can respond. By the time you see a headline, Aladdin has already positioned $10 trillion accordingly. You are not trading against other investors. You are trading against the most sophisticated AI ever built, and you are losing. Let me break down exactly how Aladdin operates, because understanding the mechanism reveals why you are always one step behind. Why the market seems to move before the news? Why you buy at the top and sell at the bottom? It is not bad luck, it is architecture. Aladdin operates across 4 layers. Layer 1, data ingestion. Aladdin consumes data at a scale that is almost incomprehensible. It processes traditional financial data, earnings reports, balance sheets, economic indicators, interest rate decisions. This is the data everyone has access to. But Aladdin processes it faster and more comprehensively than any human team could. But the real advantage comes from alternative data. This is information that regular investors never see. Satellite imagery of retail parking lots to predict quarterly earnings before they are reported. Credit card transaction data aggregated from millions of consumers to track spending patterns in real time. Shipping container tracking data that reveals supply chain disruptions weeks before they hit headlines. Social media sentiment analysis across every platform in every language. Cell phone geolocation data that shows foot traffic patterns at stores, factories, and government buildings. Aladdin knows if Walmart had a good quarter before Walmart knows. It knows if Chinese factory output is slowing before Chinese officials report the data. It knows if consumer confidence is shifting before the survey results are published. This information asymmetry is the foundation of BlackRock's advantage. They know first, they act first. Everyone else reacts to news that Aladdin anticipated days or weeks earlier. Layer 2, risk modeling. This is Aladdin's core function and the reason it was originally built. Aladdin models risk across every asset class, every geography, every scenario simultaneously. It runs millions of Monte Carlo simulations. It stress tests portfolios against thousands of potential outcomes. It calculates correlations between assets that human analysts would never identify. When a central bank in Asia changes its reserve policy, Aladdin immediately calculates the impact on bond yields in Europe, currency rates in South America, and commodity prices in Africa. It connects dots across the entire global financial system in milliseconds. This means BlackRock always knows where the risk is. They know which positions are dangerous before the danger materializes. They exit before the crash. They position before the rally. They are never surprised because Aladdin has already modeled every surprise. Layer 3. Execution optimization. Aladdin does not just decide what to buy or sell, it determines exactly how to execute to minimize market impact and maximize returns. When Aladdin decides to sell $5 billion in treasury bonds, it does not dump them all at once. It slices the order into thousands of small trades. It routes them through multiple exchanges and dark pools. It times them to coincide with periods of maximum liquidity. It uses algorithms within algorithms to disguise the size and direction of the trade. By the time the market realizes BlackRock is selling, the selling is already done. The price has already moved. And retail investors who see the price drop and panic sell are providing liquidity for BlackRock's next move. This is how $10 trillion moves before you see the news, not through a single massive trade that triggers headlines, through thousands of invisible trades that slowly shift the market in BlackRock's favor. By the time the shift is visible, it is complete. Layer 4. Feedback and adaptation. Aladdin learns. It is a machine learning system that continuously improves its models based on outcomes. Every trade, every market move, every correlation is fed back into the system. The models get smarter, the predictions get more accurate, the advantage compounds over time. In 2008, Aladdin failed to predict the financial crisis. BlackRock lost money. Larry Fink took that failure personally and invested billions in improving the system. Today's Aladdin is incomparably more powerful than the 2008 version. It processes more data, runs more simulations, and executes more precisely than anything that existed during the last crisis. The question is not whether Aladdin will predict the next crisis. The question is whether Aladdin will cause the next crisis by moving $10 trillion to safety and leaving everyone else trapped. Now let me show you the dark side of Aladdin. Because this system is not just powerful, it is dangerous, and the dangers are being ignored because the people who benefit from Aladdin are the same people who regulate the financial system. Danger 1. Systemic risk concentration. Aladdin manages or influences over $21 trillion in assets. If Aladdin's risk models all reach the same conclusion at the same time, $21 trillion moves in the same direction simultaneously. This is called a crowded trade. And crowded trades cause crashes. Imagine every pension fund, every insurance company, every sovereign wealth fund using the same algorithm. When that algorithm says sell, everyone sells. There are no buyers. Prices collapse. Liquidity evaporates. The market freezes. This is not hypothetical. In August 2024, when the Japanese yen carry trade unwound, markets around the world dropped simultaneously. Algorithms triggered selling across asset classes. The correlations that were supposed to protect diversified portfolios broke down. Everything fell together. Now imagine that happening with $21 trillion signs, not a temporary correction. A systemic collapse driven by the fact that one algorithm controls too much of the market. Danger 2. Conflict of interest. BlackRock manages money for clients while simultaneously trading for its own account. Aladdin processes information for both purposes. The potential for front-running is obvious and enormous. When Aladdin identifies a major risk, does BlackRock protect its own positions first? When Aladdin sees an opportunity, does BlackRock's proprietary desk act before client portfolios are adjusted? BlackRock says it has firewalls, Chinese walls between divisions, compliance systems that prevent conflicts. But Aladdin is a single system. The data flows through a single architecture. The line between client service and proprietary advantage is invisible. The Federal Reserve hired BlackRock to manage its 2020 bond buying program. BlackRock was buying bonds for the Fed while simultaneously advising its own clients on bond positioning. The conflict was obvious. It was documented, it was criticized, and nothing changed. Danger 3. Democratic accountability. Aladdin influences the retirement savings of over 100 million Americans through pension funds and 401k plans that use BlackRock products or Aladdin's risk management. Yet there is zero democratic oversight of the algorithm. No elected official has reviewed Aladdin's code. No regulator has audited its decision-making process. No public hearing has examined its impact on market stability. A private company's algorithm controls more wealth than most governments, and it answers to nobody except BlackRock's shareholders. Larry Fink has more influence over your retirement than the chairman of the Federal Reserve. He just does not have to hold press conferences about it. Danger 4. Market manipulation through information asymmetry. Aladdin's alternative data gives BlackRock an advantage that borders on insider trading. When you use satellite imagery to count cars in a Walmart parking lot to predict earnings, is that fundamental research or is that surveillance for profit? When you track Federal Reserve Board members' cell phone movements to predict policy decisions, is that analysis or is that espionage? When you aggregate credit card data from millions of consumers to front-run economic reports, is that innovation or is that exploitation? The legal answer is that it is all legal. Alternative data is not classified as insider information, but the practical effect is the same. BlackRock knows before you. They act before you. They profit at your expense. The playing field is not level. It is tilted so far that calling it a free market is a joke. So what is Aladdin doing right now? What is the algorithm positioning $10 trillion for? Because if you can understand where Aladdin is moving, you can at least try to move in the same direction. Based on BlackRock's public filings, investor letters, and portfolio flow data, here is what Aladdin appears to be doing. Move 1. Reducing exposure to long-duration government bonds. BlackRock has been systematically shortening the duration of its fixed income portfolios. They are moving from long-term bonds to short-term bills. They are reducing exposure to the very assets that will be destroyed when interest rates spike. Aladdin has modeled the reverse repo drain. It has modeled the Treasury supply flood. It has modeled China's selling. And it has concluded that long-term bonds are a trap. If BlackRock is getting out, you should pay attention. Move 2. Increasing allocation to hard assets. BlackRock has dramatically expanded its commodity and real asset exposure. They have launched new ETFs focused on gold mining, silver, copper, lithium, and agricultural commodities. They have acquired infrastructure assets including energy pipelines, data centers, and logistics networks. Aladdin is positioning BlackRock for a world where physical assets outperform paper assets, where things you can touch are worth more than promises in a database. If the most sophisticated AI in finance is moving toward hard assets, what does that tell you? Move 3. Building positions in emerging market equities. BlackRock has increased allocation to markets in India, Southeast Asia, and Latin America. They are reducing relative exposure to the United States and Europe. They are positioning for a multipolar world where growth shifts from west to east. Aladdin has modeled de-dollarization. It has modeled the BRICS expansion. It has modeled the demographic decline in the West. And it is positioning accordingly. Move 4. Expanding AI and technology infrastructure. BlackRock is not just using AI. They are investing in AI. They have acquired technology companies. They have expanded Aladdin's capabilities into private markets, real estate, and climate risk modeling. They are building the next generation of financial infrastructure. This is the most telling move of all. BlackRock is not preparing for the old world. They are building for the new world, a world where AI controls capital allocation, where algorithms determine winners and losers, where the advantage goes to those with the best data and the fastest processing. Let me explain exactly how BlackRock's algorithm affects your daily life. Because this is not abstract financial theory, Aladdin's decisions ripple through the entire economy and hit your wallet directly. First, your retirement is managed by Aladdin. If you have a 401k, a pension, or any retirement account, there is a high probability that some portion of your money flows through Aladdin, either directly through BlackRock products like iShares ETFs or indirectly through your pension fund's risk management. Aladdin's decisions determine how your retirement money is invested. You have no say, you have no visibility, you just see the quarterly statement. Second, Aladdin influences the price of everything you own. When Aladdin decides to reduce exposure to real estate, housing prices soften. When Aladdin increases commodity allocation, gas and food prices rise. When Aladdin rotates out of U.S. equities, your stock portfolio declines. $21 trillion in influenced assets is so large that Aladdin does not just predict prices, it creates prices. The algorithm's decisions become self-fulfilling prophecies because the money flows are large enough to move markets. Third, you are trading against Aladdin and losing. Every time you buy a stock that CNBC recommends, Aladdin might have already positioned ahead of that recommendation. Every time you sell in a panic, Aladdin might be buying your shares at a discount. Every market movement that surprises you was anticipated by Aladdin days or weeks earlier. Fourth, Aladdin is widening inequality. The system provides the best information and the fastest execution to the wealthiest clients. It front-runs retail investors. It captures value that would otherwise flow to individuals. It is a wealth transfer machine operating at global scale. The rich get richer because they have Aladdin. You get what is left over. So how do you survive in a market dominated by an AI that sees everything, knows everything, and moves $10 trillion before you finish your morning coffee? Here is the counterintuitive strategy. Step 1. Stop trying to beat Aladdin. You cannot. No retail investor can compete with 25,000 servers processing 14 million data points. If you are day trading, swing trading, or trying to time the market, you are playing a game you cannot win. Aladdin is the house, and the house always wins. Accept this reality. It is liberating. Once you stop trying to beat the algorithm, you can focus on strategies that Aladdin cannot touch. Step 2. Own assets outside the algorithm's control. Aladdin trades paper, stocks, bonds, futures, ETFs, derivatives, all paper claims that flow through electronic systems that Aladdin monitors and manipulates. Physical gold and silver do not trade on Aladdin's networks. When you buy a gold coin and put it in your safe, that transaction is invisible to the algorithm. Your asset is outside the system. It cannot be front-run. It cannot be manipulated. It cannot be algorithmed away. If you have $500, buy 15 ounces of silver, physical metal in your possession, invisible to Aladdin, outside the digital control grid. If you have $5,000, buy 100 ounces of silver and a half ounce of gold. You are building a position that exists entirely outside BlackRock's influence. If you have $25,000, allocate $5,000 to $7,500 to physical precious metals. 200 ounces of silver and 1 to 2 ounces of gold. Private vault storage for a portion, home storage for the rest. If you have $100,000 or more, allocate 20% to 30% outside the digital system. Physical metals, productive land, private businesses, assets that Aladdin cannot track, cannot trade, cannot front run. Step 3. Follow Aladdin's direction, not its speed. You cannot move before Aladdin, but you can move in the same direction. BlackRock is shifting to hard assets. You should too. BlackRock is reducing long-duration bonds. You should too. BlackRock is diversifying internationally. You should too. Read BlackRock's quarterly investment outlook. Read Larry Fink's annual letter. These documents reveal where Aladdin is pointing. You will be late. But being late in the right direction is better than being early in the wrong direction. Step 4. Build income streams. Aladdin cannot disrupt. Passive income from a small business. Rental income from property you own. Royalties from intellectual property. Skills-based income that does not depend on financial markets. Aladdin controls capital markets. It does not control your ability to earn outside those markets. The more income you generate from sources independent of the financial system, the less vulnerable you are to algorithmic manipulation. Step 5. Reduce dependence on the system Aladdin controls. Every financial product that flows through the electronic system is within Aladdin's sphere of influence. Every ETF, every mutual fund, every brokerage account. Reduce your dependence on these products. Own more, owe less, hold physical assets, maintain cash outside banks, build resilience through ownership rather than exposure through financial products. The goal is not to defeat Aladdin. The goal is to make yourself irrelevant to Aladdin, to exist outside its reach, to own things it cannot touch. That is the only winning strategy in a world run by algorithms. Aladdin controls $10 trillion. It influences $21 trillion more. It sees the news before it happens. It moves markets before you wake up. And it is currently positioning for a world where hard assets outperform paper assets. The most powerful AI in finance is telling you exactly what is coming. The question is whether you are listening. But Aladdin is not the only algorithm reshaping the financial system. There is a new AI system being deployed by the Federal Reserve that will give the government unprecedented control over money flows. It makes Aladdin look primitive, and it was just activated last month. I break down exactly what that system is and what it means for your financial freedom in this video right here. Click it now. If you thought Aladdin was powerful, you have not seen anything yet. I will see you there.